If you have been worried about the new tax policy and how it affects you, this video solves that once and for all. So let's get into it. But first, I'd like to introduce myself. I'm Ifeoluwa. I'm a financial planner and I help people transform their financial story. I have seen a lot of content creators in the bid to get you to click on their videos, share a lot of misinformation or panic to make you think that it's the end of the world as it's now 2026 and that the tax man is coming after your money. That is not entirely the truth. There are a lot of misconceptions and this video is to clear that up, so you know exactly what concerns you. One myth I would definitely like to get out of the way is that the tax man would automatically withdraw money from your account without notice. No, they would not withdraw money from your account. You have to go at the end of the tax year and say, this is how much I made and this is how much I'm remitting in taxes. One thing you need to understand with every country is that most often than not, the taxman will go after where they can get the highest yield in taxes, and that is from corporations and high net worth individuals. This does not mean that you don't have to pay your tax. As a responsible citizen, you should. But you should know that the government is not hunting for your money as an average Nigerian. So let's get into the ones that affect you. First, your personal income tax. If you're a 9-to-5er, you're already paying this from your salary, especially if your company has a proper tax structure set up. They deduct this and pay it on your behalf. If you're a business owner and you've not been paying personal income tax up till now, this is where it concerns you. You need to set up a proper business structure. Register a limited liability, have a bank account, and let your earnings from your business go into that account. And then pay yourself a salary. Now, it is from this salary that you'll be responsible to now pay your personal income tax at the end of the tax year. However, if you make the mistake of still accepting all payments into your personal account, you might end up overshooting how much you need to pay in personal income tax, because all that money would now be seen as your personal income, especially if you don't have good explanation for them. So it is important to have proper business structure. Now, as a business owner, which part concerns you? The part that concerns you is the corporate or company income tax. I can't remember the exact word for it, but the tax you have to pay as a company. One exemption you have to pay attention to is that if your annual turnover is not up to 100 million, you don't have to pay tax. So if you still run a small scale or a medium scale business, this does not really concern you. However, if you offshoot 100 million, all you have to do is ensure that you have proper record to show which one is profit and which one is company expenditure. And this is just common sense, I mean. The next one I'm going to go to is what concerns you as an investor. As an investor, let's talk about the capital gain tax. One exemption to pay attention to when it comes to the capital gain tax is that if you don't sell any assets up to 150 million within the tax year, you are exempt from capital gain tax. So for example, you have a stock portfolio. Maybe all you made from that stock portfolio in a year is just 2 million. You don't have to pay capital gain tax. This only concerns the high movers and the massive movers in the market. The next thing to pay attention to is the withholding tax that is charged on things like treasury bills, your money market fund, and the likes. Like it or not, you've been paying withholding tax before now. The thing is, it's been withheld by your asset manager and paid on your behalf. This is not a new thing to start panicking over. However, some interest that you've earned maybe from your high yield savings accounts in the past that they've not been paying withholding tax on, withholding tax will start being deducted going forward. This is just the only shift when it comes to withholding tax. For VAT, you've been paying VAT before now, and every other tax that people are sort of panicking about, there's really no need to panic about it. What you need to focus on are the areas that concerns you and how you can align your finances to ensure that you don't pay more than you have to and you don't enter into any legal troubles. I hope this video has simplified it for you. And if you found this helpful, encourage me by hitting that subscribe button, giving me a thumbs up so I'll keep showing up here. Bye-bye.